Hi, it's Steve Chater with TCT Property Management. And you know, we are the resource for people building financial security, financial independence with real estate. And thank you for joining me today because what I want to talk about is one of our best years ever. We're talking about our market in 2021 and what we can expect in 2022. As you know, we are the authors of the national best-selling book, Hold. And Hold is about the safe, secure strategy for investing in real estate. And I'm going to tell you that the people that have been executing our strategy are extremely happy with the results that they have been receiving over the last few years. And we want to say thank you for being in business with us, for doing business with us, and we want to help you continue to grow. So, what are we going to talk about today? Let's talk about the local economy, real estate values, rental and interest rates, and all of those kind of things that are important to a real estate investor. So let's start with the Phoenix area economy. In the Phoenix area right now, we are experiencing an amazing growth. We are the number one growing major city metropolis in the United States. And excuse me, what's interesting is in a survey on the new residents who moved to Phoenix, 30%, one out of three, said they came here for the job opportunities, which means we've got a great economy going on. Number two, they looked and said, well, we like the affordability of the Phoenix area. It's less expensive to live there than it is where we are right now. And the rest of the group said, you know what, we like the lifestyle. So Phoenix has been a great area, and we've seen not only the growth in population, but we've seen it grow because our jobs are strong and we're growing strong. So when we look at this employment report and we compare the Phoenix area to the United States since COVID, we can see what happened in the US. That's the red line right here with COVID. We kind of leveled out through that. We've continued to grow while the United States economy has languished. And these are all negative numbers here where we're in the positive numbers. So our employment report is strong. It's going to continue to grow strong. What does that mean for us holding real estate? It means we've got what people want. We have the houses they want. We have the rental properties that they want. Another statistic is in 2020, top 5 states that have population growth. Texas, we know that. Florida, we know that. Arizona's number 3. And so what that means to us is that the demand for housing with single family homes and any kind of rental property is just continuing to be strong in this area. Look at North American van lines. And interesting, the red states here are the ones where there's outbound, and the blue is where the people are coming and moving inbound, and the gray areas where it's pretty balanced going in and out. Look at Arizona. Okay, Arizona's number 2. The only one that's that's more is Idaho, interestingly. And people are moving because they want the freedom that these states provide for them. So we have a housing shortage, and pretty much everybody knows and understands that that's what's going on. And if we take a look back over the past 2 decades, we went through an overbuilding period here, the part that's in the red. And you can see that while our population was increasing, we were building more and more houses until we hit the economic crash. And in 2008, 2009, it switched. And so what happened was our population continued to grow. We're still adding people to the Phoenix market. In fact, you'll see in a minute that it's almost 1 million people, but we haven't built enough houses. And so that housing shortage is creating additional demand. Look at this. Our population grew during this period of time in the first part of this 2-decade period of time. It grew at 28%, while housing grew at 34%. And since that period of time, our populations continued to grow at 20%. We've gone from about 4.2 to almost 5.1 million people, but the housing's only grown at 11%. So in addition to that, here's our single family permits for building new homes, and this is what it looked like back in the early 2000s, and then it dropped off, and we weren't building enough homes. We're still not back up to where we were there, and so this is not going away anytime soon. We are still not building enough to meet the current demand. So let's talk about the market statistics with Phoenix. And when we look at the median price of all of the homes in Phoenix, we started out last year with $340,000. We ended up at $430,000. That's a $90,000 increase, almost a 30% increase. And from January to June, our trajectory was really high and it was going really fast. Since that point in time, we're at a more reasonable 15% per year track. So that means everybody's property is growing, the values of their property is growing. Investors are extremely happy about all of that. At the same time, look at what we saw. We saw interest rates continue to go down, and now they've kind of flattened out. They went down, hit historic lows, and they're starting to inch up at this point in time. What can we take away from that? When we did the research for our hold book, we went back 40 years and we found that the average interest rate for a single family home mortgage was 6% over a 40-year period of time. We're still at half of that right now. And so we know that the Federal Reserve wants to raise the interest rates up. So if you haven't refinanced, it's a good time to do it. If you haven't purchased additional properties, it's still a great time to do it because the interest rates are still low. This is just a chart showing us we're going all the way back to the year 2000, and we are looking at the average price per square foot. And look at what's happened in this. If you have been holding on to a property values over this whole year 2000 to 2021 gone up 180%. If you purchased a property at the peak of the market last time, we're still up 41% over that period of time. And if you were fortunate enough to buy a property, an investment property, when we hit our bottom, property values are up 239%. Congratulations on owning a great investment in a great area. And as we look at this past year from December 2020 to December of 2021, we've seen a 31% increase in the price of housing, in the median sales price of what? Of houses from 1,500 to 2,000 square feet, which is typically what we see for an investment property. It's been a great year. It's been a great year to own the real estate. Here's one of the reasons why it's going to continue. If we look back here in 2014, we had about a 5.5 month supply of homes on the market at any one time. We are now down to below a month's worth of homes on the market. And so our population's still growing. We don't have enough inventory, and that's causing prices to go up. But in addition to that, we know that inflation's going on right now, and the building materials, look at the prices that are going up, and lumber prices, how they've gone up, and concrete prices, how they've gone up. Real estate and the ownership of real estate is your best inflation hedge against these rising prices. And as the price of a new home goes up because of the cost to build it, that means the price of the existing homes come up as well. So what about our rental market? Well, Phoenix Business Journal article, Arizona cities rank among the best areas to buy rental properties. And what's happening in our market is we have Wall Street money that's coming in. We have Wall Street money that's coming in, and they are building single family homes, detached homes, but you cannot buy them and live in them. They are being built just to rent only, with community pool area, community recreation areas, and small yards, single family detached homes. And they're building more and more and more of these entire subdivisions in the Phoenix area. It's been a great time. And why? Look at what's happened over this last 6-7 years on the increase of the rentals and the rental prices. Where we were down below $1 a square foot for rent, we're now up about $1.30 a square foot for rent. Now, let me just pause here a second and say, If you have not increased the rents on your rental property, the market is saying that it's a great time to do it. And it's also a great time to be able to reinvest in by doing some remodeling or refurbishing. And we'll talk more about that in a minute. But the rents support it so that it makes it a good investment for you to do that. Look at what's happened. In Q4, at the end of 2019, it was about $1,600 a month rent. Then we get to the end of 2020, and it's $1,800 a month. It went up $230 a month. And here we are at the end of 2021. Rents have gone up about $370, a 20% increase. And the median rent right now is $2,200 a month. That's great for real estate investors. Here's another way of looking at the same thing. So as we look at and we say, well, in Phoenix, Arizona, if somebody was to buy a property with 20% down payment, what would the average rent look like? Well, it's about $2,000 a month. What's a positive cash flow is the difference between the blue line and the red line, because the monthly payment is $1,400 a month. So we see here that we continue to have strong positive cash flow. At the same time, the prices of the properties are going up. This has been one of the best years ever, and I'm going to show you in a minute. We're not in a position where it's going to stop. So what about the investor strategies? What do we do with this information? Well, a couple of thoughts. Number one, you could refinance your current property and reacquire it. You've built up enough equity. You just saw that over the last year, the median price went up $90,000 to $100,000 in additional equity. So we have people pulling equity out, and they're either remodeling their property and increasing the rents, or they're pulling the money out in order to purchase another property. So if you put 20% down on a property and you've got a strong positive cash flow, what's happening is the tenant is paying off your house for you. They're paying down the loan while that property continues to go up in value. We're also seeing people use the stock market and cashing in some of their gains. Here's the deal. If you want to call us, we're happy to talk with you about what's the best strategy for this investment, because this is not the right time to sell. This is the right time to hold. This is the right time to acquire some more. Why? Look at the inflation rate. While we've been bouncing along over the past few years at low inflation, that's not happening anymore. And so that inflation is driving the price of housing up at the same time that our demand, because population's moving in, jobs are moving in, all of that is positive for us. In the meantime, this has been a great year. If you had money in the stock market and Dow Jones Industrial Average went up to almost 20% this period of time. However, that's from down here. It's been kind of flat as you bounce along through this period. So we have some people taking their chips off the table and saying, okay, stock market's been good for me. Now, what can I do to hedge myself against the inflation that's coming in? So why do I say that we're poised to continue? This is the Cromford Market Index, which measures supply and demand, and it indicates the direction that our market is going for the next 6 to 9 months. We have seen our prices in our market follow this index 6 to 9 months afterwards. So here's 2019. And you can see that a balanced market is down here around 100 to 110. If it's above 100, that means it favors the person that owns the property. It means the property values are going up because there's more demand, not enough supply. So let's add 2020 in here, and you can see what happened during COVID. And we had a drop in the demand, but since the COVID drop here, it's continued to go up. So instead of being at a balance of 100, it's sitting here at 420. What does that mean? That means that people that own the properties, if they hold on to these properties, it's going to continue to go up. So that's 2020. What happened in 2022? We saw it continue to go up over 500. It's come back down. Why? Because we had more properties on the market and the supply and demand is equaled out. but it's also following the trend of 2021, and it's continuing to go back up. So at the end of 2020, property values are going up. At the end of 2021, property values are going up. This is why I'm saying it's not a time to sell. This is a time to acquire more, because this is going to continue to happen. So we saw with the Cromford Index in 2019 about a 6% appreciation rate. In 2020, we saw about a 12%. In 2021, we saw a 27%. My guess is we're going to be somewhere 12, 15 to 20%. We're not likely to repeat this amount of increase here that we did in 2021. So thank you for spending some time looking at this. This has been one of the best years ever. If you want to have a confidential investment report, how much equity do you have in your property? What would be the strategy for continued growth of this property? Is there a way that I can increase my return on investment? Should I acquire other properties? Should I pay this one off? We're happy to have those conversations with you. And we would encourage you to get in touch with us, because this market update, this is June 2021. I'm sorry, it's actually for the year 2021. This is one of our best years ever. And we are the resource for people building financial security with real estate. This is what we do. And we're so honored to be able to help you build wealth, build equity, build positive cash flow with your real estate investment. Thank you for working with TCT Property Management Services, and we look forward to a strong future.